I think that's always an important thing to remember in regards to stock market or just the financial markets in general. They will give you opportunities. They will give you, you could even short a TLT. I mean, that was a heck of a money making opportunity. There's instruments out there that allow you to do that, right? I'm telling you, buying that back all these shares in the 70s, 80s, 90s, whatever, it's going to come back to bite them. You just wait. It might be 6 months from now, it might be 2 years from now, 3 years from now. It will come back to bite them. And they'll be wishing they had just saved every dollar, stacked that money, made good returns on treasuries right now, and then just bought back crazy amounts of stock. Because when next time housing really gets hit negative, whenever that is, which it will happen. It's just, debating when that's going to happen. Toll Brothers stock's going to get killed. It's going to be down 50% plus. My gosh. I mean, poor financial decision. Yeah, AMD's just been lagging Nvidia, in the AI market. Nvidia just beat them to the punch. And so now AMD's playing a game of catch up here, which is never fun to play a game of catch up. But that's what's going on there. Howdy, folks. Hello. What's going on with AMD here? AMD sinks as it takes wraps off NVIDIA competitor updates AI forecast. Well, technically it's down less than NVIDIA, so I don't know if I would really call it sinks. AMD shares fell on Wednesday as the semiconductor giant officially took the wraps off its AI accelerator, the MI300, which it hopes to compete with the NVIDIA in the data center. At the event, AMD CEO Lisa Su said the MI300 has 3 times higher performance for certain AI data types and 7 times the intake performance. This comes as the company updated its forecast for AI accelerator market and now see total addressable market of $400 billion by 2027, up from $150 billion this past August. In October, AMD said it expects the MI300 to generate more than $2 billion in sales in 2024. The MI300X contains 153 billion transistors, a dozen 5 and 6 nanometer chiplets, and has advanced packaging, all to aid its performance, the company said. It's the most advanced accelerator in the industry, clearly referencing NVIDIA's H100. Well, NVIDIA is really on the H200 now at this point in time. But anyways, okay. Interesting. Yeah, AMD's just been lagging NVIDIA, in the AI market. NVIDIA just beat them to the punch, and so now AMD's playing a game of catch up here, which is never fun to play a game of catch up. But that's what's going on there. Somebody asked if I started by Alibaba. The answer is no, I have not started by Alibaba. I likely will at some point in time here, but I haven't started buying it yet. Somebody said they have Liz Young on too much. They do have her on a lot, I will be honest. Like, she's definitely one of the most people on there. Somebody said a funny British accent. I don't know if that's... Did I do a British accent? I don't know. Maybe I did. Somebody says Palantir, bye. Ooh. Anyone else loving this Palantir crash? Yeah, and I mean, although Palantir's gotten hit recently from that 21 level, it still had a tremendous year, Let's see the year to date for Palantir. I mean, even after this most recent crash in Palantir, it's crazy. Still 169% year to date. I mean, whoo-wee. If you never get 169% on a stock in a year, I mean, it's phenomenal. Absolutely phenomenal. So I was just taking a peek at Ally here. It is a very, very low PE name. For Ally Financial, I mean, you're looking at 7 times next year's numbers, so extraordinarily low, just to be honest. Revenue growth expected next year for about 5%. So obviously it's not the most exciting kind of growth play, but that valuation's on the floor. So that's pretty compelling. And one of the big things Ally is really benefiting from is a lot of people have been moving money over there because of the savings accounts. Well, usually they're kind of up there with some of the best ones. Okay, so these are kind of more ads. So SoFi is obviously always up there, right? SoFi offered 4.6% right there. Barclays, Citibank, Discover. Marcus is up there, 4.4%. They don't have Ally on here for some reason. Usually Ally is almost on all of these lists for best savings accounts. Are these partners? Oh yeah, these are featured offers. So whenever you go to these websites, they do like featured offers. But wow, that's weird. Ally's not on this one either. Usually Ally's on the list of all these guys. Very strange. Very strange. They did not have JP Morgan on there, did they? JP Morgan doesn't give you crap. Bank of America? What? How'd they even have those on there? Chase gives you 0.01%. Come on, man. Bank of America gives you 0.01%. Like, how would you even have that on there? What? What in the world is going on here? These are advertised ones. Wow, this is strange. Maybe Ally's not cutting these guys checks anymore or something. Ally would always be on these lists. And now they're not. Strange. Very strange. Look at this. They're nowhere to be found. I don't know. Maybe they're not cutting these guys checks anymore or something. This is strange. How are they not even mentioned? Fishy. Fishy, I'll say that. So Ally's got 4.25% right now. So SoFi's slightly beating them. SoFi's got, I think it was 4.6% if we saw that correctly. So interesting. But that was weird that they didn't even show up on any of those lists. Like, what the heck? Very, very strange. But let me see their latest LIIR. Because I mean, I think a lot of people that bank with the traditional banks, right? The Chases, the Bank of America, as Wells Fargo, all those big guys that are on every corner of the United States of America, but they don't offer you any return. I think a lot of people are looking like, you can get like great returns on savings accounts. So where can I put my money? That's like extra money that I'm not investing actively, like that's just chill money. Where can I put that money right now? And I think that's where companies like Ally are benefiting, SoFi are benefiting, and maybe even Marcus from Goldman Sachs are benefiting because they have those 4% plus rates, right? So they can kind of steal away some customers. But let's see here. Ally. So their earnings were way back in October, as all the financials always report way before almost everybody else reports. So GAAP net income, $269 million. Versus the same quarter last year, they were at 272. So actually their GAAP net income was down slightly. Interesting. Adjusted EPS was down as well. I'm wondering if that has to do something with how much they're paying on the savings accounts, right? Maybe. I want to see their overall income statement here. Retail auto loans, okay. Should be here in the press release, hopefully. So net financing revenue came in at $1.5 billion. That's versus 1.7 billion. So I'm guessing that's because the finance market has slowed down, obviously over the past year with higher interest rates. Other revenues up a lot for the company. So other revenue was up to 435 million versus 297. Adjusted other revenue 491 versus 359. Provision for credit losses was up quite considerably, up about $70 million year over year. Non-interest expense was up quite a bit as well. That was up about $70 million or so. So pre-tax income was down quite a bit. I mean, almost 50% pre-tax income was down. Net income was not down nearly as much, though. A little messy. That's what I'll call it. Crude's under 70. Loving it. Absolutely loving it.
An easy year?
Well, this year wasn't an easy year. I mean, it was anything but. It looks easy. If you don't know anything under the surface, you look at the return.
So he says TLT has been the easiest money they've ever made. That's what I'm talking about.
Of the 7. Now, of late, they've certainly looked better, but you know my point.
Yeah, I mean, it felt easier, I think, than 2024 will be, especially if you had picked the right stocks.
No wonder why you feel like that. I forgot of the stocks you owned,
Microsoft,
Nvidia. Of course you think it was easy.
But next year it will be a different regime, and it will become more of a stock picker's market where you kind of have to find that needle in a haystack, and you have to be agile in your thinking because the data is going to dictate the direction of the market.
All right, I appreciate you being back. Ankur, thanks. That's Ankur Crawford at Post 9. Up next, we're tracking the biggest movers as we head into the close. Steve Kovac is standing by once again with that. Steve?
Hey, Scott. Yeah, shares of one tobacco company getting smoked today.
Tobacco?
And a cybersecurity company having its best day ever following a strong earnings report. We'll reveal the names when Closing Bell returns after this.
Are we talking tobacco? Yeah, I mean, there's been a lot of tremendous money-making opportunities this year. You just got to know where to look. I mean, obviously, it goes without saying, tech stocks have been incredible this year, right? I mean, just incredible gains, making 100% plus returns this year. Then you could say, obviously, if you played TLT right, which not a lot of people did, let's just be honest. I mean, this is TLT over the past year. There was a very small, select group of individuals that started buying right here and only bought right here. It have made really good money, but that's a very small amount. I would say most people that have been playing TLT this year have lost money overall. Actually, the far majority of people that have been playing TLT this year have lost money. It's a very select people have been actually making money in TLT. But there's been a lot of money-making opportunities out there. And then, obviously, if you were having put positions on some of those dividend stocks, some of the safety plays, those have performed tremendous. So it's definitely been a year that's given a lot of opportunities. And that's the thing about the stock market. Every year gives you a lot of opportunities to make a lot of money. Those opportunities are in different places, year after year after year, though. But if I look at this year in the financial markets in general, great year to own treasuries as well, right? If you got some money in treasuries, like you've gotten 5+% on that. If you got some money in savings accounts, you're getting 4 to 5% on that. That's good. Last year there was a lot of pain out there, but there was other places to make money. I mean, last year, if you had puts on anything, you probably made a lot of money, right? And if you had puts on a lot of the big tech stocks or tech stocks in general, I mean, you printed money last year, right? And so the bears made money hand over fist last year. They've given a lot of those gains probably back this year, unfortunately, for them. But, if you were a bear last year, it was easy money, man. Especially for that first 10 months of the year up until, mid-October or so. Oh my gosh, you could have cleaned up money, right? So I think that's always an important thing to remember in regards to stock market or just the financial markets in general. They will give you opportunities. They will give you could even short a TLT. That was a heck of a money-making opportunity. There's instruments out there that allow you to do that, right? You could have went short the VIX. There's even instruments out there that you can short the VIX. This year would have been tremendous. So every single year, there's a lot of different opportunities and places to make money. And that's an important thing to remember. And so 2024, there's going to be a lot of opportunities to make a lot of money. Not all the same ways of making money that in 2023 are going to be the same as 2024. There's going to be certain other things that outperform tremendously on the upside or the downside in 2024. But there will be opportunities, and that's every single year. You just got to know kind of where to position, where not to position. So, anyways, just thought that was an important subject to cover there. So we're looking good. 2025 is, I think, a wild card, because you never know. Maybe commodities come back at some point in 2024, and that wouldn't hurt the 2024 numbers, really, because commodities lag big time, really, in the economy for the most part, outside of maybe gas price a little bit. But commodities lag pretty significantly. So if, let's say, commodities did go on another big bull run, let's say that happened in 2024 at some point in time, that would likely hurt inflation numbers in 2025, okay? Which would cause a new fear in the market to be unlocked, which the new fear that would be unlocked in the market would be a fear of, oh boy, Fed's going to have to raise more in 2025, or rates going to have to stay in a more elevated place in 2025, things like that, right? So we'll see how obviously all that plays out, but it's a perfect setup for 2024. There's no dang doubt about that. So we're waiting on a few earnings here that are coming after the bell. We're going to see what those earnings are, and then after that, we're going to listen to the Toll Brothers conference call, which I'm very excited to listen to.
To keep your expectations relatively muted as you go into an election year, and understand that it's not just going to be the pure observable fundamentals that are operating on the market.
The fact that WTI flirted with $70, Mike, even dipped below it at one point. We saw energy in the working sector in the S&P today. I mean, as we talk about this soft landing narrative that's at least for now intact based on the macro data we've been getting, what is the energy market signaling, and is it in contrast to that?
I don't know that the price of crude is necessarily foremost sending a macro signal about the strength of the global economy. I mean, today you did actually have an inventory draw that was greater than expected in crude because refineries were running heavy, and so production is in play. And so I'm inclined to believe what the futures curve says, which is this is an oversupplied market in the short term. I don't think it's because economies are falling off a cliff. Maybe that changes if you really catch
earnings alert.
Some acceleration to the downside in the price.
Chewy missed for Chewy.
We were at this price when the
Chewy alert
was kind of reawakening a couple of years ago. So I'm not that concerned about that as a signal right now in terms of growth.
Okay.
Stock down 7.7%.
Again in a few minutes. In the meantime, Chewy earnings are out. Steve Kovac has the numbers. Steve.
Yeah, and shares down about 9% now, Morgan, after missing on the top.
It's going down rapidly.
Of 8 cents. Street was looking for a loss of 6 cents per share. Revenues, a slight miss here, $2.74 billion. Street was looking for $2.75 billion. It's been bouncing around all over the place, now down about 8%, Morgan.
All right, I will take it, Steve. Thank you.
Can't double miss in this market. That's a double miss, folks. Can't do that. Can't freaking do that.
So about 10% higher from here on the S&P.
Can't do that.
And small caps are intriguing. Does that mean you think the Russell could do better than 10% in 2024?
We don't do a price target on the Russell 2000. I used to do that, and people didn't pay too much attention to it, to be honest. Yeah. But we do think that small caps have the potential to outperform in the year ahead without putting kind of too fine of a number on it. And going back to the election conversation.
Oh, I would love to get a number on it.
I had a funny experience last week. I had a couple small cap portfolio managers kind of hound me for statistics on how small caps do in presidential election years, because I agree with Mike on the playbook for the S&P 500. But we actually found that in election years, presidential ones, small caps go up almost 10%.
Oh, wow.
Stats since 1979, and the large caps, it's a little bit less than 6%.
Wow.
So it's interesting that even in a presidential election year in which you've got this massive uncertainty, small caps tend to shine.
Okay, and we got more news coming out, out of the pharma space. Angelica Peebles has that. Angelica.
Wow.
Yeah, John. Reuters reporting that AbbVie is nearing a deal to acquire Cerevel Therapeutics, and that's a company that's developing neuroscience drugs for diseases diseases like Parkinson's. And they're saying that they're in talks for about $45 a share, which would value Cerevel at about $8 billion. And that would be a big development. We saw AbbVie acquiring another company a few weeks ago. And Cerevel is a company that they are developing neuroscience.
Yeah, what she was talking about there was pretty important, guys. Small caps outperform an election year, which obviously 2024 is election year. She's talking about 10% return usually, which lines up with kind of my thought process that, small caps could be very well positioned for 2024 and actually significantly outperform the S&P and the NASDAQ as well.
Change at least in recent weeks in terms of the trading activity. Does that continue into 2024? And I guess perhaps just as importantly, how much is something like M&A, which I realize is picking up across industries right now, but how much is that going to be something that spurs stock activity or stock gains next year?
Well, on the M&A question, it's interesting. We read through a lot of transcripts for earnings reporting season, just S&P companies. I don't have time for the small caps. But I've noticed that we haven't seen a lot of commentary on buybacks recently. There's not as much commentary on debt pay down as I was like, but we see that happening in the stats. But I have noticed a little bit more chatter on M&A than what we've seen in the past. And it's not like companies are coming out and telling us exactly what they're going to do, but it just feels like when the cash deployment story has kind of diminished overall, that's the one thing that stands out where there's a little bit more enthusiasm. And as you mentioned, you're starting to see it across sectors. I would say on healthcare, one of the fascinating things we've seen is that if you look at small caps,
Chewy so far is holding up decent considering a double miss. And the fact that the stock's only down 5.5% is actually a win. But do keep in mind, Chewy's been pretty wrecked. Let's pull up my eCalm watch list here. Chewy has been hammered. So that's the one good news for them. I mean, geez, look at Chewy. Chewy was 118 back in February 2021. Now it's $19. Well, technically 18, 17 after hours. Holy smokes. But, that's one of those stocks that has been so obliterated that even though they came in with a double miss, it's not being hit as hard as you might think. Because, in this market, you come in double miss, like you're down 10% plus. So GameStop.
There's not enough analyst coverage on this company to make any good comparisons here, so we won't be doing that. Also, no earnings call or any other data we're going to get from the company, so this is really the memeiest of the meme stocks,
what
I guess.
Joke.
About 2%.
They don't even do a conference call?
All right, Steve Kovac, thank you. Now let's bring back Mike Santoro.
Are you serious?
Disinflation
it's
dynamics
embarrassing.
the recent
ChargePoint miss big. Big miss for ChargePoint.
Wages indicator today, a higher productivity growth in the third
wow.
quarter feeds into this disinflation narrative. Of course, the yields are responding. Look at the 10-year Treasury yield, right down toward its 200-day moving average. We're down under 4.12, around 4.12% at the close. Not sure we can get that, but essentially, it's challenging that longer-term trend line, that 200-day moving average. There you go, and you can see it has found.
Somebody has any update on continuing Twitch after the end of the year? I don't know. We'll see. Maybe, maybe not. I'm undecided still.
If it breaks out, maybe that's decisive. But from here, maybe logical to expect.
I'm having fun, though. It is pretty fun, I will say that.
Down toward 390 in the yield. And
this is not a very good return on investment for my time.
Relative to
it's fun,
consumer discretionary on an equal weighted basis. This is a one-year relationship, and you see this last little move, right? You have crude really falling apart, and then a little more of a bid in consumer discretionary. They continue to outperform staples as well. So you take some pressure off the consumer from that front as well. I don't think it's the main thing. It's going to be make or break for the economy into next year, but it certainly helps on the margin.
I see that little last